Is the U.S. in a trade war with China?
Has been, and has been for quite a long time. The Chinese, in order to grow their economy, want to grow their exports and want to help increase their middle class. Certainly understand their interests. But as a matter of our national interest, we have to be cognizant that we don't have equal trading partners around the world, and we've got to be serious about trade policy and making sure that we open new markets, but in return we'll open ours. And we've been through quite a period where we've not had that reciprocal arrangement to the degree that the American people expect. So I think a reset with trade policy can be a healthy thing. And what comes on the other side of this major fight that we're in, and that now the American people are acknowledging we're in, and the politicians here in Washington are acknowledging we're in, it can be a much better world of trade, much more equally beneficial than the previous arrangement.
Do you agree with the administration's approach in this most recent round of tariffs that were announced?
Look, I can quibble about the details, but the broad brush approach here is the president's approach. He is the key architect of this trade approach. His style is one that is always critiqued. But I'm not going to be in the business of critiquing the president when it comes to trade. I'm glad that he's engaging in trying to reset these international agreements. I have consistently been a pragmatist when it comes to trade agreements and looked very at the details and the specifics of every trade agreement before I would vote for it. I voted for some, I voted against others. So having had that pragmatic approach, I think for us to have some choppy waters here, if it leads to a better outcome, I'm willing to go through it.
Is the House going to take up the issue of tariffs anytime soon?
No.
Why not?
What we've consistently done in law over decades is give the president authority when it comes to trade. It will be very difficult for the Congress to take in that authority because they don't like a singular action. I believe that if we're talking about this question of tariffs by this time next year, it could be a different conversation. But in the short run, I don't see the House or Senate taking this authority away from a president that's engaged in a major battle.
We're hearing more and more from businesses about how the impact of escalating trade conflict has the potential to negate the effects of tax reform. Does this concern you?
Sure, there are plenty of concerns, large economic concerns that we have. Rising gas prices is a major economic concern. Fiscal policy by the Congress, monetary policy by the Federal Reserve. There are a lot of factors going into what's driving our economy and the potential rough waters ahead. Everyone is prejudging what is going to happen on trade, and there's a large amount of concern. But I think we need to give the president space and time.
Let's talk about the Financial Services Committee.
And interestingly enough, when it comes to trade, the Chinese are the most closed off when it comes to financial products. They've been consistently stealing our intellectual property. So to have an engagement by the administration to reset and potentially get China to open their market to some of our financial products, to more of our financial products, to stop the theft of our intellectual property. Those things would be huge wins. So there are potential gains out of this battle that's going on when it comes to trade. And the major critiques that's done moment by moment, day to day, about this president has to do more with style than actual policy. So let's see what this looks like once we have a new reset.
If Republicans keep control of the House next year, what should the Republican agenda be regarding financial services policy? What should the Financial Services Committee focus on? What are some specific issues?
Well, I think we need to look to the next generation of regulatory changes and law changes. The battle that we've had for the last 8 years is to refine, to change Dodd-Frank. We have made substantial changes this Congress to Dodd-Frank. That is a positive thing. Regulators are making additional changes. Those things are very positive. But that's rear view mirror looking rather than looking out the windshield. So so much of what happens when it comes to financial service policy is to look at the last crisis and to make changes based off of that. The next crisis will look different than the previous crisis. So we need to be forward-looking when it comes to legislating. So my focus has been around Fintech. How do you deploy technology in the financial services space? I think we have huge opportunity to build bipartisan consensus that can make it into law to change our whole regulatory footprint, to embrace technology, to embrace innovation when it comes to financial services. And those aren't the Dodd-Frank, not Dodd-Frank battles that we've had of the last 8 years. So we need to look to the next generation of legislating on how we actually make the economy stronger, to make sure our markets are still the global center of capital formation, and that we are the model for the rest of the world on capital formation and financial regulation. That means we need to get out of this Dodd-Frank morass that we've been in and actually be forward-looking and how we change our regulatory and law footprint for financial services.
So how are you going to be best positioned to follow through on this? Will it be as a member of leadership or as chair of the Financial Services Committee?
I'll make that determination the day after the election.
Can you provide any insight into how you will be making that decision?
Yes. So first, Republicans need to get the majority in the House of Representatives. So I spent a lot of time on the political efforts outside the four walls of this building to make sure Republicans have the capacity to drive a legislative agenda. If you're not in the majority in the House, it's very difficult to determine the agenda. You're then responding to the majority party's agenda. I want to be able to, in the position to drive the agenda. So Republicans keeping the majority is job number one in my decision making. Ranking member is not as good a job as chairman. And then also what happens with Republican leadership. I believe Kevin McCarthy is the next Speaker of the House. Steve Scalise is the next Majority Leader in the House. And so if those things happen, and there's an opening in financial services, opening a WIP, then I actually have great choices to make the day after the election. If we're in the minority, it is a less good array of options to make. But I've spent a lot of time. I've spent my 14 years on financial services, chaired a subcommittee there and on another committee focused on financial services. So I've remained deeply engaged in the legislating on the committee and have significant thoughts on what that agenda would look like for the committee, but also have this role in leadership as Chief Deputy Whip that has taken a lot of my time over the last 4.5 years. And having filled in for the Whip when he was recovering last year for a portion of the year, I know my capacity here in the Capitol to count votes. So I'm gonna have to wrestle with that.
If Democrats do take control of the House, Maxine Waters is in line to be chair of the Financial Services Committee. How are you going to work with her?
Well, I've passed 3 bills out of the House working with Maxine. 2 have become law. So I can work with Maxine, and I can legislate with Maxine. Maxine is going to have to make a decision, though, on how she intends to operate. I think there have been some dangerous comments that she's made that I disagree with. She will then have to make a decision on whether or not she wants to be a policymaker or simply resist. And that's going to be left up to her on how she seeks to engage.
So where is there opportunity to work with her? What issues do you have in common with her?
Well, I've dealt with capital formation, angel investing, and in dealing with folks that are on the edges economically. So the contention I would make is when you look at a question like housing, Asheville, North Carolina, and other major urban centers have similar issues. A small town in western North Carolina has huge housing pressure for affordable housing. It's one area. Those that are on the margins that are so-called subprime folks looking for lending, they may be racially diverse, but they have the same economic issues. And so how do we get those that are left unbanked as a result of bad regulation and the loss of hundreds of community banks? How do you help those that are on the margins economically get the little bit of lending they need so that they can make their own life choices for their family, whether it's for lending to get education or to get housing or to perhaps start a small business? Those issues cross all districts. My district economically has a lot in common with Maxine's district economically, and the needs of my constituents and those that are on the margins are very similar to the needs of her district constituents that are on the margins as well. So I think we do have an understanding around some issues that we can work together on. Larger issues, we're in different places, and the greater debate in this capital and in this city, we're in different places. But there are opportunities for us to engage.
You mentioned earlier that the next financial crisis isn't going to look like the previous financial crisis. Can you elaborate on that? What do you foresee as being the next financial crisis? Do you think America's largest financial institutions are prepared for it?
Well, by the metrics of Dodd-Frank and by the metrics of the Obama administration, yes. But the crisis will not be simply born out of banks having sufficient capital and liquidity. I think we've got to look at the broader footprint of the financial markets, broadly speaking, with the weight of the new regulation. We have some trades that are made non-economic because of regulation and the type of capital you have to hold. And some of those trades the lack of those trades can actually make the market much more brittle when you have rising interest rates. What we've looked at over the last really 15 years of lowering and historically low interest rates by the Federal Reserve, that is markedly different than what we're going to look at through the next 10 years, the next 5 years, the next 3 years when it comes to Fed fiscal policy. So the next crisis will be manifestly different than the last crisis, simply based off of the monetary footprint of the Federal Reserve and the size of the holdings of the Federal Reserve and the size of the federal debt. So there are a number of concerns out there that are potential, but we obviously don't know what the contours will be of the next financial crisis.
Like what? What are some concerns out there?
Well, in a rising interest rate environment, the pains of an institution become much more obvious, and so we'll see as the Fed starts raising rates where the problem lies.
Turning to, you mentioned earlier, Fintech. Cryptocurrencies. Do you own any?
None.
Why not?
As a policy maker, I've limited my financial holdings, and over the period of time that I've been in Congress, I've gotten rid of more financial holdings. Mainly, I was involved in real estate before I got elected to Congress, and getting rid of those properties to have a more simplified financial disclosure statement. And having a simplified financial disclosure statement means that I can be a more sincere advocate for what I think are potential opportunities for the American people globally and in terms of technology and regulation. So when it comes to cryptocurrency, I've not bought nor sold any. However, I think the potential is quite real.
How so?
Well, we have some of the highest cost of payments in the world here in the United States. The movement of money is relatively expensive compared to other regimes around the world. Cryptocurrency can be an answer to that. A decentralized network has enormous potential across not just financial products, but all the things that we do in government and in the private sector. There's huge potential around blockchain. There's huge potential around tokenization. There's huge potential around ICOs and enormous challenges that come with it, whether it's anti-money laundering and knowing your customer regulations that in light of cryptocurrency become even more challenged to get disclosure. So What I see with cryptocurrency is great potential, but not a clear understanding of what the regulatory framework looks like for the federal government and state governments to ensure that we have some understanding of the movement of money, and we have some technique to understand the contours of what is happening in the world of crypto.
Do you think some regulators have warned that there is room for fraud and abuse? Do you share those concerns?
Sure. And those that are serious about cryptocurrency will acknowledge that there is a massive amount of fraud that is taking place in the current regime globally. And if the United States would take action on fraud, it would move even more offshore. So my view is that we have to have a regime for ICOs to take place here in the United States, and that would give us clarity on the movement of money and clear out a massive amount of potential for fraud and bad actors. And I think we need to be very serious about how we do that. With the Securities Exchange Commission, they've had the initial undertaking, the CFTC. They've been very smart in how they've approached this. And so I'm encouraged by the current work the regulators are doing. But eventually Congress will have to step in and have some framework of law. We're not there yet, but we need to make sure that we are getting all the data we can to be smart about how we legislate when it comes to crypto.
Okay, and when Congress does step in, is part of that giving the Securities and Exchange Commission more authority to regulate cryptocurrencies as a security?
Perhaps. Okay. But when it comes to the utility of cryptocurrency, when does it go from being a security to actually a real-world token? So if we're going to talk about the movement of information, if we're going to take the Internet of Things and actually take it to an Internet of Value, you would have an ICO that creates a token, a coin, which then would ride on the framework of the blockchain that is created thereon. But the utility of that, the real value of that, is captured not simply by being a currency, but by being able to move some other thing of value, whether it's storage space or perhaps driverless cars communicating with one another. Those things look different than a security. And so that's the reason why eventually Congress will have to step in to provide clarity, is there has to be a clear breakpoint between what is a security and what is a real-world utility. And right now there is no clarity and no capacity of clarity under our existing regulatory framework for a security to be anything other than a security, which is currently inhibiting ICOs from taking place, legitimate ICOs from taking place that have a legitimate purpose. And that's going to be the work that we'll have to undertake is some conversion point between a security and something that can be used in the real world that have some value that can then provide a real-world purpose, not a means of speculation, but a real-world purpose to enable a technology.
How soon does Congress take this up, considering how quickly this market is growing and changing? Is this something that will happen in the short term?
Could be the next Congress, but I would say between 2 and 5 years, Congress will have to legislate.
The Treasury Department is expected to be publishing a report soon with respect to financial technology. Is cryptocurrency going to be part of that, do you expect?
Yet to be determined. We've had conversations with Treasury on what should be included in that package, but they're talking to a number of folks that are not just in this town, but in Silicon Valley and globally, and I'm encouraged by that, that they'll have a substantial offering in terms of what regulators and what Congress should be focused on when it comes to technology.
What can you share anything about what you expect will come out of that report? Will it provide a roadmap to in the near term, or is that something that Congress will take up next year?
Yet to be determined.
Okay. Going back to committee, the Financial Services Committee, fundraising has always been an important part of being a member of the Financial Services Committee for both Republicans and Democrats. You get a lot of your fundraising dollars from the finance industry. You also support a lot of policies that benefit the finance industry. How do you explain that to voters, especially when there is such a heightened rhetoric right now around draining the swamp and pay for play?
Pretty simple. I have my worldview that I stated when I ran for office before I got a single contribution. People can embrace my worldview by contributing or not, and that's their decision. But their contribution is an endorsement of my policies, not the other way around. And if you look at my service on the Financial Services Committee, the single biggest issue for the world of finance and the single biggest lobbying effort of my time in Congress was around the bailout. I voted against the bailout in 2008. I voted against it once and twice. So to say that I'm beholden to the industry, their number one ask in my 14 years of Congress was a blank check from the Treasury, and I voted against it. So I have my agenda that I'm focused on, and that is not relying upon people contributing or not contributing. I've got my worldview, and I intend to try to fulfill it in terms of policy.
Not specific to you, but just in general, what role does the finance industry play in determining leadership of that committee?
Well, the steering committee on the Republican side makes the appointment. And if you look at the diverse group of folks that are on the Republican steering committee, all corners of the Republican conference are involved in that, senior and junior members alike, leadership and non-leadership. They're the ones that make the final determination. And I will tell you that for all the talk about fundraising being the deciding issue for leadership elections, that's not how the decision is made in the room. And whether or not, So
fundraising doesn't play a big role in determining the ability to fundraise isn't a characteristic that leadership is looking for on that committee?
No, you need to have a strong leader of the committee. Now, as a part of that, I've been focused on having a team inside and outside. In my policy team internally, I'll rank against anyone else on the Hill. And my team, internally, I rank against anyone on the Hill. But on the outside, for my fundraising, my travel to help members get reelected and to get new members elected, I'll put that up against anyone save the Speaker, the leader, and the whip. And so I'm proud of my efforts to raise money and help defend the Republican House. There is no mistake that there is money in American politics. That is in no way newsmaking. But my decisions are not born out of any financial contribution. And that is the reason why I've been able to be an ethical and legal member of Congress over the long term. And in the short term, that idea of contributions driving policy is counter to how I operate and how I engage legislatively and politically.
Contributions aside, when you hear from executives in the finance industry, throughout the industry, what is the biggest concern they have these days when it comes to financial policy and financial regulation? What are their concerns?
Broad brush. I mean, look, you're business TV. I mean, it's what's on Bloomberg, what's on CNBC that is very much a front and center for C-suites with large and small financial institutions. Economic growth is the biggest driver for the finance industry, for the financial services industry, and rising economic tides are very positive for large and small banks alike. And a healthy economy means that we have a healthier financial services industry as well. So getting right-sizing regulation, getting some clarity around regulation, getting clarity around tax law, and seeing the American people have fatter wallets is very beneficial for risk-taking, proper risk-taking, to grow new jobs. Those things are front and center with the meetings I have.
Biggest U.S. banks have recently made some changes with their lobbying here in Washington, D.C., sort of revamping their lobbying, presumably to help improve their image. Why is it that the biggest U.S. banks are still sort of pariahs here on Capitol Hill? Is that true?
Well, look, you have the progressive left that has taken on banks, large and small, in fact, and attempted to foist upon banks all the economic challenges of the American people. It is not really connecting with the populace. Look at the last presidential election. Look at elections to the House and Senate. That is not the winning message of simply blaming folks. People want an optimistic agenda on how you're going to move the economy forward. We've moved the economy forward in the last 18 months. We're far better off now. American people are far better off now than they were 2 years ago, 5 years ago. But when it comes to the debate around financial services, you have the progressive left that is intending to define the terms of debate. That is the reason why I'm focused on the areas where we can build consensus. I'm not going to defend any institution. It's not my job as a policymaker. They need to go defend themselves and go make their case on their utility to our society. But banks are important, and lending is important for economic growth. So to have healthy capital markets, to have healthy banks, is healthy for our economy. When we have economic growth that is born out of the financial service industry driving growth, that's not healthy. And when you have financial firms as a drag on growth, that's not healthy. These institutions should ride along with, just like real estate, should ride along with economic growth. Healthy builds healthy. And that's my agenda as a policymaker. That's my focus as a policymaker, to make sure we have a healthy industry that is taking care of their customers and ensuring that their customers have right disclosures, that the consumer is protected, but that we also have economic growth and economic opportunities. And so making sure that we have that well calibrated is really important, and is the interest not just of the committee, of Congress, or the government, but of the American people and economic growth, and global growth for that matter.
Can you give an update on what's being dubbed Jobs Act 3.0? Mitch McConnell has pledged that the Senate will take a vote on a second package of financial services bills later this year. What do you expect will be in it, and when will the House move on this?
My hope is we're weeks, not months away from us voting on this. The contours, obviously Chairman Hensarling has been the driving force of this, and I'm going to let the chairman make those determinations.
Okay, and what do you expect will be included in this package? What types of legislation? What sorts of things are you advocating for?
Well, the things I'm advocating for are the things I've legislated on. Obviously, I'm like everyone else, but the chairman is going to make the final determination.
Same with the tax reform, tax package 2.0. When will the House, can you give any update on timing on when that piece of legislation may come?
I don't see that coming in the month of July, but the majority leader schedules the floor, and we'll be working on the details with input from the whip office on when's the best time to have the vote.
Is there bipartisan support for that?
You got to ask Democrats to determine that. My view is that we have to put a solid tax package out before the election, so the American people can see that how we want to continue economic prosperity and economic growth. And the final contours of that obviously are heavily dependent on whether or not the Senate will engage in terms of policymaking, and if you have any sort of sense of bipartisanship out of the Senate when it comes to tax. That's yet to be determined. You
said putting it out before the midterm elections. Polling suggests that the message of tax reform isn't resonating with voters, that it's not a top issue for voters. How do you explain that?
Economic growth, prosperity. How do you feel? The idea that you go run on a piece of legislation is not really commensurate with the interests or the needs of the American people. The American people want to know what you've done for them. And the fundamental question going into this election is this: are you better off than you were 2 years ago? And economically, the American people are much better off than they were 2 years ago. The economy's better off, job growth, better off. People are coming off welfare rolls, getting into the workforce. We've taken on substantial amounts of policy, not just in terms of economic growth, but in terms of opioids and human trafficking, to end those two horrible epidemics and to make people healthier and better off. We still have a lot of work to do on the broader agenda to deliver on that. But to simply go run on a piece of legislation, that's not where the politics of America are right now. But that fundamental question, are you better off than you were 2 years ago? That will be the thing I'll be asking my constituents this fall.